So we're going to talk about the political side because we've kind of had a recent update on that, which will be useful for you. And the other thing is economics. Obviously, I'm slightly nervous to have a far more experienced economist with me than I am, but I have dabbled the odd degree here or there, so I get what it means for a property. Can you still see? Am I in the way?
Problem.
You're right. Okay, here's better. I have to walk. I can't stand still. I just can't say anything. So everybody, those who know me, I don't necessarily talk through my slides, by the way. I know some people like them, but I also do stories. So that's what I'm going to go through. Now, who saw, I don't know if you saw it because I think it might have been regional, there was a BBC Inside Out programme recently. Really awful story. A guy who'd served in the army, paid £13,000 for educational property, couldn't get the money back, committed suicide. And one of the things that I've hated over all the years that I've presented is people trying to tell you the secrets of success. I think buy-to-let is quite easy to work out. There are no secrets and nobody should have to pay to understand them. There are complications, but people like Habito will help you. Basically, you have to buy something for less than you sell it for and the tax you pay. I don't know about anybody else. I don't think that's a huge secret that you have to pay all that money for, and you have to rent it out for more than it costs you to rent it out and the tax you pay. A little bit more difficult with Section 24, with having to pay on the interest. So actually, that is a little bit tougher, but there aren't any secrets to that either. You talk to a tax person and they help you. That's how it is. So please, please, let's all just make sure nobody ever, ever ends up in that situation again. Because that sort of money on property education, most of it is in a book for 10 quid or at events like this. So if we can kind of spread the word on that, that would be great. So I'm going to sort of run through lots of slides here. You're very welcome to these slides, by the way. And I am staying till afterwards, so I don't have to rush off. What I think is really interesting is that pre-credit crunch, basically house prices used to move in the same direction. And for about the same amount, so they'd go up in London, they'd ripple out everywhere else, and then London would fall and everywhere else would fall and stuff. And most people, I think, still think that's how the market works. Well, it just doesn't. So if you just take this from a country perspective, so if you take the one that starts at 160,000 and sort of heads up off to 240,000, that's England. Most of that is London, by the way, so good news. How many people here are landlords in London? Happy days. Unless you bought in 2016, probably. It's kind of dipping downwards. But look at Northern Ireland, right? So there's Northern Ireland hit. You can see this was a price bubble waiting to happen. So the average for Northern Ireland, which is the blue line that went, the light blue line that went ahead, the average price for a property in Northern Ireland went above England. That's got to be, somebody should have said, that's not right. That just is impossible, and I can kind of tell you all of what the whys and wherefores. But what I find quite frustrating is where you see where it is now. So house prices there fell by 58%. 58%. And now they're about 38% behind, 12 years on. So put your hand up if you've heard that house prices double every 10 years. Put your hands up if you still think, please don't put your hand up, prices double every 10 years, because they don't. And they haven't for a long time in many, many places, only a few. So that is the other piece of free property education secrets to success. Don't believe what you say from the property rah-rah set. So the scary thing is actually, one thing none of us have ever thought of, over those 10 years, you get new journalists coming into the market that never heard of the credit crunch. And I got a text from one of them the other day, and this is why you really have to do this stuff yourself, or download my monthly reports, which is free of charge. And I got a text from this girl in Northern Ireland, new journalist. She went, oh, I'm so excited. She said, house prices have gone up, I understand, by the biggest amount in Northern Ireland, 3.1%. I went, well, that is, I appreciate that looks exciting on paper, but for somebody that bought in 2007 whose house price is 38% lower, they might not like your article. And quite frankly, that's still half the rate that house prices have gone up in the past. So you might just want to put that in context. She didn't. She still came out with that title. And it still got published. So the problem with the media is they don't actually really understand what they're comparing. They either just take what they're given and put it out there, and of course that's mostly for PR purposes, present company accepted, of course. And here's why, if you kind of look at this data, so one of the things I'm absolutely obsessed is, I want to understand what happened in every single year. And this is the reason why. So if we'll take England, because that's the easiest one to explain. So basically, what each of these bars shows you is, the red one shows you that if you take the average price today of a property in England and the average price it was in 2000, and you smooth out all the highs and lows, on average, you would have got 6 to 7% increase in price. Good news. Unfortunately, everybody still thinks that is happening, and it isn't. Because the next stat, which is the most important stat, which hardly anybody that assesses house prices has ever told you, is that a weird thing happened between 2000 and 2005. Buy-to-let mortgages came in, so there was more money poured into the market. Who remembers buying at you could only ever buy at 3.5 times your income? That was just taken off. No, can't have it. I love the wave. Thank you very much. That was nice. I feel like a friendly community. So that was taken off. And then, like you're all evil because you've bought properties and really stopped first-time buyers from getting on the ladder. Would you like to know somebody that's more evil than you? They're called the Bank of Mum and Dad. Because what they did is we first started inheriting properties. Oh, I go backwards. No, I need to go forwards. There we go. We started inheriting property. Then, despite the news that you heard, endowments started paying out. So what did the Bank of Mum and Dad? I'm sorry if you're here, but you are very naughty people. Because what you did is you kept giving your kids more money. And all of that increased house prices. So between 2000 and 2005, in pretty much every region, started in London and it did go out, and it stopped in 2005. Every single property pretty much went up by 30 to 40% in London in 1 year, and by 20 to 30% in every other region. So if you take any data prior to 2005, it's completely wrong, because it took a one-off increase, which we have never seen since, and it was mostly in 1 year. And what you can see is, you can see that happening right across. So if you take that in 2005 in England, that 6 to 7% return is halved. If you take it from 2007-8, since the credit crunch, then, and we were talking about average wages not going up so much, that certainly had an influence, it's gone down to a third of what it was. Okay, and then obviously it's gone down a little bit further. Similar thing in Wales. The year-on-year is a little bit more because their recovery is slightly behind the rest of the country. Scotland and Northern Ireland sadly don't have a red line because their data doesn't go that far back. But again, you can see that it's happening absolutely everywhere. And if I take that a step further, how many people think, oh, we're going to go up north because I don't want to pay 3% stamp duty in London? Come on, be honest. I know you lot. Thank you very much. Thank you. Be careful, because I live near the north, and I can promise you that what you've been earning down here isn't necessarily going to happen up there. It might in some places, but let's just start off. So remember, go to the northeast. Northeast is my favourite part of the country, okay? I never understand why everybody focuses on London, because northeast is much more interesting. So the northeast, if you take the average price today and you take it away from 2000, the average price in 2000, you are talking 5.5%. So slightly lower, but you'd be happy with that every year, wouldn't you? That would be good. And again, house prices double every 10 years. Well, if you're northern, that really doesn't happen, because since 2005, the growth has been 1%. 1%. And since the credit crunch, it's actually less. So if I see one more, the first-time buyer affordability is terrible, I will probably end up in prison because I am going to strangle somebody for telling people porky pies. Because it is just not true. And then the interesting thing is, really, the northeast should be seeing this wave of growth. But it's not even seeing that year on year. We've never seen that trend before. It's never happened before, but we are starting to see it. And then again, if you look down the line, it's exactly the same. But you look where London is, and I know it's got a little fall at this moment in time, but that's just because we know pretty much when we have a recovery, we tend to everybody gets a bit too excited in the last 2 years, overpays, and then it kind of falls back a little bit. We're fairly sure that kind of happens at a time. So those that are looking at investing in the north, you have to be incredibly careful. I've seen properties there that have not changed in price for 20 years. Okay, so because please, I know you get a nosebleed north of Watford if you live down south, but do not do what lots of people do and buy a property up north because it's just a little bit too far for you to travel, because it is extraordinarily dangerous. I know these areas. I come from Nottingham, for example. Big buy-to-let hotspot. No idea why. There's some areas that are really good, but actually there's some areas that really, really you should not be investing in at all. So that's kind of gives you where we are on prices at the moment. On rents, really interesting. So rents have always risen way, way behind house price growth. That is now changing, and it's almost switching. Now, there's a really interesting fact about rents. For those that you've spoken before, you'll know that say this, is that unlike property, so property prices, when they go up, people gain more equity and they've still got their income and maybe that's growing. So they can continue, it's like a bit of a volcano, they continue to pay more for house prices. But you can't with rents. The only rent you can afford to pay is based on the wage you've got in your back pocket. And as we heard earlier, actually real wages aren't really growing that much, particularly for a lot of the people in the rental market. So what you can see here is it doesn't matter which country you're in. Unlike house prices, they're pretty much hovering around the 2% level. And they have been for ages, which might make you ask the question, but can somebody tell me where on earth do you get this thing about rents skyrocketing and extortionate? I don't know how many times I've tweeted. Does anybody remember a man called Mr. Corbyn? Yeah. Disappeared from our view at this moment in time. But he kept talking about this, and I kept tweeting him and going, have you seen the government data which a government produces to say that's rubbish? It just simply is not true. And what we know is that, and actually, that 2% is very significant. And what it means is that actually we know, having studied it for a long time now, rents rise in line with wages, full stop. They don't even rise typically in line with inflation. We'll talk about that a little bit later. But you can see here again, you go to the northeast, you've seen that there isn't great price growth, but there also isn't great rental growth. What's the problem if your rents aren't rising in line with inflation? It's not just me working here tonight. You had your beer, you had your pizzas, come on. Bit back.
You're losing in real terms.
Yeah, exactly. So basically, you're all giving yourself a wage cut. Okay? Nobody's thanked you for that, have they? But that's what's happening. Some areas are doing a little better. Obviously, this is just a year-on-year thing. But again, if you're considering moving out of an area you know really well, be very, very careful that you absolutely know what you're doing, where you're buying. There are opportunities, but they're nothing like. You almost could have bought anything here in 2000 and made money, but that is not the case if you move outside of this area. I love this. I've never had slides designed for me. They are slightly scary. I actually don't like horror movies or anything like that, but it is really nice. So how many of you worried about rent controls? None of you might put your hand up because I've just put this slide up first and probably should have done it beforehand. But let's move on. So Scotland have decided, and in law, they can now introduce rent controls. And what they've decided to do is said, what we're going to do is, because you evil landlords are putting your rents up by so much money, what we're going to do is we're going to limit the amount of increase that you can do. Now, they got to this calculation because if you're a housing association or a council, you would typically put rents up, and you're allowed to do this by CPI plus 1%, for example, or 0.5%. That's been standard for donkey's years. Okay? And they've pretty much applied the same principle to private landlords because they can't kind of do anything else. However, they don't appear to have done the same calculations that I've done, which show that, and this was Zoopla Rental Index that came out recently, they showed that from 2007 to 2018, and they do this on a regional basis, which is quite useful, rents have risen by 18%. And one of the things, again, that's quite interesting about rental indices and changes is actually they all say pretty much the same thing. So Zoopla is saying about 1.5%, ONS is saying about 2%, whereas you look at house price indices, and they're all over the place. I think there's about a 40% difference between the average house price of Rightmove compared to the land registry, or Nationwide, I think, is the biggest difference. So you evil landlords putting up these rents by 1.5% per annum, how cruel of you. During that period of time, if you check on inflation, it went up by 2.9%. Now, I'm assuming that as your landlords, you're reasonably good at maths, and that even you can work out, well, that's good news. Because if somebody does introduce rent controls, and as in Scotland they would introduce this system, you'd actually be 30% better off. If I can do those numbers, I just don't get why somebody else can't. So I don't think they will come in, because I think somebody is going to watch this film at some point and go, we've just seen Kate's slide, and we think it might be a bad idea. So don't worry so much about that. So summary of the current market. It's quite interesting when you look over property over time, and this is not a Gordon Brown moment, by the way. We tend to have a boom market or a bust market and very little in between. Okay, and that makes it very difficult for companies to make money, because you're either making loads of money and then they're too busy to innovate, or they're not making any money and they've hardly got any staff, so they haven't got enough to innovate. So it's why one of the reasons why our market doesn't move on. But actually, for the first time ever, we've got quite a steady market. And that's kind of quite nice, because we have got some interesting things happening and some new stuff happening. So the good news is, as well, your tenants are pretty much staying put. So we're talking 4.5 years for an average tenancy, which is great from that perspective. But the bad news is it is much harder, apart from some areas of London I expect at the moment, to secure a bargain. And please be aware that the natural growth that you have all loved and benefited from, it probably isn't going to be there. Don't bank on it. It's great if it comes, but what I'm saying is don't bank on it like you have in the past. So that's kind of talks about the market. The other part of it is the economy. Now, I find Aberdeen is the best place. So what's Aberdeen famous for? Oil. What's happened to oil prices? And this is where Aberdeen is really interesting, because what it shows is this isolated place which shows exactly how the economy massively affects property. And what we are seeing, again, since the credit crunch, and really back to 2005, is those local economies now are much more influential on your house price and rents and the success of your buy-to-let investment than even what's happening nationally, necessarily. So what I love to, I've taken this land registry data, taken it back to 2007, and the reason is they didn't really have a credit crunch. Because although oil prices slowed, they didn't slow for very long. So their economy continued to be relatively successful. So the price and rental falls that everybody else around the country felt weren't really kicking in, and they survived that. But what was really interesting is as soon as oil had sustained problems, my word, they have seen a recession when the rest of the UK was all going up and recovering from the recession. So their property prices today have fallen by 6.4%. I'm going to show you probably the most scariest bit. There is a tenant group that turned around and said, why is it, and how disgraceful is it, that rents never fall? So I went back to them and I said, have you seen what's been happening in Aberdeen? Because this has also seriously affected the rental market. So you can see there that the average rent has fallen by about 33% over the last 5 years. Pretty scary stuff. But if you know prices on a bad few years will fall by 20%, and you know your rents might fall 30% in a bad market, you've kind of got a little bit of an idea of what your risk might be. So it helps you to assess potentially sort of future things, or make sure you've got a way of mitigating your risk. So for example, I'm guessing longer-term mortgages would help you do that and help you to ride, but I'm not a financial advisor. I'm not allowed to give mortgage advice, just in case. So bearing in mind what's happened in Aberdeen, which town's going to be next, or could be next? What happened last year to one town that was quite devastating? It had... no, I'm looking for somewhere down. I'll give you a clue, down south. You're close on cars. Begins with S. Swindon! Yay! Well, no, obviously not for them. But because Honda are looking at, is it Honda or, I never remember, there's several of them, isn't there? Because they're looking at closing down all their factories, one of the scariest things I read was that something like, I think it's 10,000 people will end up losing their jobs, but that trebles when, so it's either trebling up to 10,000, but there was one family, 10 people would lose their jobs. 10 people. So you imagine how many people there are going, yay, I'm going to go and buy a house. Because there's probably not a lot of them. So it is really, you really have to understand the economics, because Swindon might seem like a good idea at the moment until you kind of think that through. And of course, the reason the economy works so well, if it's doing well property-wise, is that if you've got a growing economy, that means more jobs, and it means wages rise. Waging rises, good thing, because if wages are rising, you can increase your rents. Okay? If they're not rising at above inflation, you're going to find it difficult to do that. And we just find that naturally. So you just need to bear that in mind. If you know that in advance, it gives you just a few months, 6 months or something, just heads up, which is what this is. You're investing. It's about managing risk at the end of the day. So you can see really flat as a pancake. And not doing so well now, but hopefully we'll get to dizzy heights of 2% moving forward into the future. So we don't know quite where it will go now, but hopefully we are expecting a little bit of a bounce, certainly over the next 6 months. The other thing that I do find really interesting from a property perspective is the influence of job announcements. Because at the moment, we've got two competing things going on. Firstly, as we heard earlier, and it's kind of nice that we've at least been presenting the same data. Rarely do you get two economists agree. Or I'm only half an economist, really. So what you can see there is that we have one of the highest employment rates that we've ever had before. So that's really, really good news. But if anybody remembers last year, it kind of felt like every day somebody was going bust. And then, of course, you had two big ones. So maybe Flybe, definitely Thomas Cook has now gone. And there have been some horror stories, actually, about Thomas Cook. So people who have been employees, their landlords have actually just let them go, which is a bit tough on those guys. But that's sort of fear of things that are coming up. So just the sheer fear of job losses, even when we're at the highest employment, can definitely influence people. What that does is you're not going to make a commitment to buy a house, so it slows down the market, more bargains for you if that's what you're into, and also it potentially increases the rental market. So one of the things that's quite interesting about the rental market is everybody just says, all these evil buy-to-let landlords, you're all crowding out the first-time buyers. Never quite understood that argument myself, because that would mean you were offering more than a first-time buyer. And I'm kind of thinking that surely the trick is you offer less. Because otherwise you wouldn't be much of an investor, would you? So I kind of look at that. But the kind of issue is that, you know, you'll get more to do, but also people will rent more. So the biggest rise in the rental market was not evil landlords, it was called a recession. And that's what happened, and that's what influenced it. So the good news is wages are definitely on the up. And what we saw last year was the ability of renters. So it wasn't just the tenant fee ban came in. That did, if wages had not been rising in excess of inflation as they were, and quite well from previous years, nobody would have been able to put the rent up. But there was ability to put that rent up. So that's good news. And that's expected to stay in a similar state for this year. But it also gets slightly better because it is good news that the national wage is going up. It is tough on companies. But my view is do you know what? When you come to blame people about the housing market and affordability, if you look at those wages and the rises people were getting up until the recession, one of the biggest problems that we have is not you guys, it's the fact that companies are not paying people enough to live on. And they're not paying people in more than inflation, which means that they're getting less money, which means that they have less money to spend, which means we have a smaller economy. So I find it quite interesting that everybody likes to blame you and letting agents for some reason. I don't know what they've done to hurt anybody. But actually, we need to have that living wage moved up, and that's good news for you guys because maybe in the past you put a few % increase, but maybe you can kind of put a little bit more in. What are the forecasts moving forward? Well, this is a huge rise from 1% to 2% GDP. That's good news. Inflation staying relatively low. That's good news. Employment not expected to change. The unemployment levels not expecting to rise hugely, but individual areas, completely different picture, and that's what you've got to be aware of. And the bank rate, you can see somebody's decided, or the Bank of England indeed said, we think they're going to go down as far as the rate is concerned. So where are we going for the future? And what this tells you is from a rental perspective, and again, this comes back to, are you serious about investing in the north, and do you know what's expected up there from versus what you get down here? So overall, on average, about a 15% increase in rents for the first time ever, very similar to the price increases. House price increases never happened before. But look at London. Look at those, that's serious rent rises, again, after some recent falls, of around 19%. And outside of that, we're looking at a 13%. And that's because it's just people get paid more here, and they're expecting bigger rises. So you've really got to look at these numbers very, very carefully. And they're not that complicated. Basically, somebody's looked at what the income growth is and then just said, right, if that's the income growth, let's just apply a little bit more here and there to rent. So that's effectively how it works. From a price forecast perspective, I've got two columns here. So you've got Savills, Knight Frank, James Lang LaSalle, PwC. They don't quite go up to the 5-year level. So on the left, you've got Savills in 2020, and then you've got Knight Frank, what their forecasts are, JLL. And you look at those, and none of them are particularly exciting. Maybe another 2% drop. I think Savills are quite harsh on their house price figures. But they have been quite good at predicting them in the past. But they're expecting still some falls this year for the London market, whereas you're up to West Midlands and East Midlands. I'm from there, that's good news. 3%, but I'm expecting more than that because I have a really good house in a good area. And we've got a co-op, which is brilliant. I do live in a little village, by the way. That's quite big news for us. We were very excited. And the 5-year growth, this is really interesting. So what's the growth for London over 5 years? It's 4%. What are you used to here every single year since 2000? 6 or 7% a year. A year. So if that's correct, that's quite an incredibly low amount. I do think that's a little low. I think probably Knight Frank have got it about right. But the reason for that is, so back in 2000, there was a cap on how high house prices would go. So if they went more than 3.5, 4 times income, house prices used to fall back because lenders couldn't lend more than that. So what's happened since 2014 is there is now a cap on lending because lenders can only lend so much 4.5 times, and also because affordability is assessed now at 6 or 7%, not say the 2% as it was before. What that's done is put a cap on house price growth. And really, from the last credit crunch, that's kind of been pushed to its limits here in London and some of the southeast. So that's where those figures are coming from, and it's why you're looking to see more in the other areas. But what I would say is don't let that fool you, because there are properties out there that haven't gone up for 20 years and probably won't go up for the next 20 years. So you have to be incredibly careful if you're moving outside your area. Two best forecasters that we've seen over time, Savills and PwC. And I quite like the PwC figures. I think they're probably pretty spot on for this year and next. So moving on to, I'm conscious of time, and there might be some drinks left. I can see there are. So from my understanding, the likely changes that you're going to see over the next 5 years, they are really trying to push whatever they put in their manifesto, whatever went into the Queen's speech. That's what the government is going to be focused on, and that's what the departments are being told to get on and do. So firstly, improving energy performance. I'll come on to that later. Still looking to raise home ownership, but actually some of the information that came out recently from the English Housing Survey suggests there are more youngsters actually buying now and owning a home than necessarily in the rental market. So that they've already done quite a good job on raising home ownership, improving the home buying and selling process. I can't wait for the new Homes Ombudsman to come in. I don't know if anybody saw recently, but one of the developers, who will remain nameless unless you'd like to name them, came out with a report that said, actually, we build rubbish homes, and we're not very good at dealing with people. How they are still selling houses, I have absolutely no idea, but that was their conclusion of themselves. Congratulations. So that will be good news from the new home side. Possible stamp duties changes to look out for on the 11th of March. Please don't ever think anybody's going to take away that 3%. That's just not going to happen, I don't think. Definitely improving the rights of renters, lifetime deposits, Section 21 ban, and infrastructure changes. We don't know yet whether HS2 is going to come in. I think apart from the fact that they've started to build it, is my understanding. I haven't quite understood that one. So those are the things they're going to focus on. Legislation you need to watch out for. So Fitness for Human Habitation Act, everybody know what that is? You're all very excited about that, I assume. So as long as you're renting out a property and it's in decent condition, please don't worry about it. But if you don't know what a decent condition is, for crying out loud, get somebody to have a look around that does. Minimum efficiency standards, so you have to you can't rent properties out that are F&G rated, and that is going to go up to C. So is anybody renovating properties for rent at the moment? No, you're just all having January off, are you? When you are, don't forget, if it's a bathroom, whatever it is, just get your property up to C. Don't do the minimum. Do what's going to be required of you later, because we know that's what they're after. Why is it hugely in your interest to make sure your property is energy efficient at C? partly because you're right, legally, I'm just giving all the answers away, aren't I? But there's another reason. What's one of the biggest rising costs that the tenants have to deal with? And if they're spending all their money on energy bills, what can't they give you?
Rent.
Exactly. So this is like a massive win-win for everybody, and we save the planet. So we make David Attenborough happy, and we all want to do that, don't we? So there you go. You've got capital gains taxes changes coming in.
What were you referring to with the 3,500 cut?
So you have to, basically from the energy efficiency side, to make sure that it is legally compliant. So for example, to get it up to an E rating, you have to spend up to £3,500 to get it to that rating, to make sure it's renting out. If it's more than that, there is potentially an exemption. So that's what that's for. Capital gains tax changes are coming in. Mostly that's to do with the timing that you have to pay. So if you haven't bought and sold for a little while, you need to check up on those. How many people rent through agents? And how many of you know that they've definitely got client money protection? Cool. If you don't know, find out, because they're very, very naughty people. They are allowed till April, but they should have client money protection in place now. And you've got the Extension of the Tenant Fees Act, so if you're a self-managing landlord, you can't, from June, allow existing tenants, you can't charge them to do referencing, all of those kind of things. So you've got that coming in. On its way, Section 21, it just appears to be going. I don't know why they've had a consultation on it. And it was the weirdest consultation I've ever seen in my entire life. I actually declared it in writing as not fit for purpose. So I hope you're very proud of me for that, but it really was weird. The electrical safety 5-year checks is really important. I would get your electrical safety in now, because they don't think there's going to be enough electricians around to get it done. So get it in now. It's not a bad thing to do. I've just had my electrics and I've just had my gas safety checked. And I can't tell you how lovely it is. I went to bed and I just thought I'm safe, and I was really happy about that. Get your EPC levels up to C. Letting agent regulation is coming in, which is good news. We're pushing really hard for that, because you should not have to deal with people that aren't qualified as letting agents. It's really outrageous. And anybody renting in Wales? Marvellous, we'll move on. Possibility of landlord registration. I don't know that they can actually ever bring this in, because how are they going to find people? They can't, they're failing on licensing at an individual local authority level. But it is there, so it's already been passed, so they could bring it in, but I can't see it happening at a national level. Few other little bits and pieces that you might not be aware of. So I work on 2 groups, Home Buying Selling Group and the Lettings Industry Council. We have a really simple aim. Let's just do a better job. Let's do a better job for tenants, landlords, letting agents. Let's do a better job from estate agents, lenders, etc. We want to scrap licensing. I want to scrap licensing. I think it's like just a stupid idea, quite frankly, and it's got worse. So what we want to introduce, and it's something that you can start doing now, is a property MOT. So basically, we don't want any properties allowed to be advertised online or offline unless they have had a legal and health safety check, just like you have with your car. So that's what we're looking at. The only extra cost really is having all the information there, but that's a good thing. So we're not asking for anything else legislative. We're just asking you to have all the paperwork there and for somebody to sign it off that it is legally safely let, and nobody's allowed to advertise that property without one. Makes perfect sense as far as we're concerned, and better than licensing and a lot cheaper. Reservation agreements, you'll start hearing about. Government's doing some testing on there, and that would mean that if you make an offer and it gets accepted, you sign an agreement to say, yes, we're both in this for good. So that would make the surety of buying and selling a little bit better. We're not sure whether they're going to go to pilot or not. We do have a very exciting thing. We do like our acronyms in property, so we've got something called a BASPI. At the moment, if you're a seller, you will have to produce something like 38 pages of A4 with lots of repeated information for all the different people involved in buying and selling properties, lenders, legals, etc. We've knocked that down into just 14 pages. And it's also going to be digitalised, and we're going to look to see if we can test that, aim to test that this year to make your life easier, because that's what we're here for. So does everybody know when you buy a house, you kind of have a lever arch file and you have A4 sheets in there, and isn't that lovely? But they do take up a lot of room. Those are being digitalised, and they're going to be called property information packs. So this kind of stuff is all working in tandem together, so rather than isolation. So property MOTs, the buying and selling information form, property information packs, everybody is doing something called talking with each other. Not something we're very good at across the property market, but we're making it happen. There are hugely better rules coming in on leasehold. You have to have, freeholders have to give the leasehold packs within a designated time, and they also can only charge at a certain cost. So there is some really, really good stuff happening that will make yours and everybody else's life easy. We're also working on improved education. I love what Habito are doing in the terms and conditions. The average reading age, does anybody know what that is of an adult in this country?
9.
Yeah, it's about, I think, well, we've had 9 and 12. It's somewhere in the middle of that, about 11 or something. Yeah, absolutely. And we all have to bear that in mind. So great that they've done their terms and conditions on that, and hopefully that will get more ways of doing it. And also, this is what I love about this industry is everything's everybody else's fault. So agents blame the legal companies, the lenders, and surveyors don't like the lenders or the legal companies, and it's all everybody else's fault. And I've said, do you know what? If you want people to trust you, you kind of have to trust each other. So we're just trying to work out how we do that. And we've got an initiative for that. So hopefully that'll be good. Last slide really is, what does all of this mean for you? So I thought I'll put that on a nice, easy to read slide before you go and have a drink. You have absolutely got to understand your return on investment. Okay, you just need to know that if you've got this much cash sitting in a property, is it giving you a better return than anything else? You might think it's slightly weird for somebody to say that at a buy-to-let event, but we want to look after you at the end of the day. Because if you mess that up and you're not in here in a year or two's time, that's no good for anybody. We've all lost them. So it is really, really important to understand your numbers. And I like in terms of I've been saying for some years now, I have no idea why anybody holds property with cash. Because the main reason buy-to-let delivers better than any other financial investment is because you can leverage it. So it's like, would you like to give away the best reason for this investment to give you a return? Yes, please. Yeah, that's fine. Off you go. I'll just deal with it in cash. Okay, so it just necessarily isn't the best thing to do. Make sure you're charging market rent, because one of the things, actually the skyrocketing and extortionate rents, that accusation is your fault. And the reason it's your fault is for nice reasons, don't look at me like that, is because you are nice. So somebody moves into your property and 5 years later, you're charging them the same rent. Naughty, naughty, naughty. Because you're not helping your tenant, because when they go out, they've got an extortionate skyrocketing rent rise of 20% on the open market. And in between whiles, you've just given yourself a wage decrease of 20%. And if rent controls come in and you haven't got it up to market rent, you can't do anything about it. So it is really, really important. I know it makes it look like you're looking after your tenant, but actually it isn't. And everybody accuses you of skyrocketing and extortionate rents. So what's the point of being nice? It just isn't. Regularly you review your finances. So one of the things that made me realise how important that is, I didn't know how regularly lenders review their product portfolio, but it is every 3 months. There are 400 rules and regulations now to let a property. How many people here self-manage? If you're not a member of a landlord association, please make sure you get there. I personally think it is absolutely impossible, unless you're using a self-regulated agent who's ALA or RICS members, unless you're part. The easiest way you can do it is through a landlord association. But if you're not going down one of those two routes, you are going to get fined. You just are, because somebody's going to catch you out. And it'll be over a stupid thing like a broken glass or something like that. There was a guy in York, it's a great example from the council, his tenant complained about something really tiny. Housing officer came round, £18,000 bill to make all of the other changes, because they don't just check the broken glass, they check everything else. So it is really important that you do that. Get your electric signed off now, as I mentioned, because there is a possibility in certain areas where people will be made redundant, and retail, etc. I do think it's worth having a little look at rental guarantee. The cost of it is so tiny in comparison. And bearing in mind you're losing Section 21 potentially, 5 months in court, unless they do something special for you. I just don't think that's going to happen. Plan your renovations, as I mentioned, and really understand your entry and exit strategy. Lots of people come to me and say, Kate, I've got a great deal. And I'm going, well, that's lovely. But do you need the property? Why are you doing it? What do you expect it to deliver? And what's it going to do to your tax? And if you haven't answered all of those questions, get those answered, because you've really got to move. I know there's a little bit at the top that says, that was my big ending. Somehow it's just gone up there. For those that have ever been armchair investors, or you've just been kind of letting out one property and that's it, forget it. This is not something you can do like that anymore. Nothing is guaranteed. If you're a professional landlord, you can do it and you can make a lot of money. But if you're just sitting there and just keeping your fingers crossed, it ain't going to happen unless you're extraordinarily lucky. So for me, good market's good for rental, harder for capital growth. We've got a good economy, but you've got to protect yourself against that unemployment. Maybe a little bit of a let-up on the buy-to-let attack, but there will be continued changes to legislation, as I've highlighted earlier, and there is a big aim to improve tenants' rights. If you're a good landlord, that's not going to hurt you. But for any of you who are dodgy in the room, which I doubt it, then it is going to make a difference and you could get a big fine. I hope that was a useful run-through and happy to answer any questions either as we go or as we have drinks, etc., however Habito would like to do that. Thank you very much.